Hi, everybody. Welcome. Let's get started. Test, test. One, two, three. Okay, I think everything looks good. Let's see. Dow Jones up 1.6%, Nasdaq up 2.5%, S&P 500 up 2% today, Russell 2000 up 2.4%. Everything's up across the board today. Any questions, comments? Please let me know in the live chat. University of Michigan consumer sentiment preliminary figure for March came in at 57.9. We're going to focus on that today. The yield curve is up across the board, so flatter today. 10-year treasury yield is at 430. 430. 5-year treasury yield is up 4 basis points to 407. Oil is at $67 per barrel. Wall Street climbs after steep declines as tariff concerns dampen sentiment. U.S. equities staged a modest recovery on Friday after a turbulent week marked by a broad sell-off as investors assess the economic fallout of the Trump administration's chaotic trade policies, putting major indices on track for weaker losses. The technology sector, which bore the brunt of the sell-off, spearheaded sectoral gains with a 2.8% rise. An index tracking banks gained 2.9%, while chip stocks such as Nvidia and Broadcom advanced, leading the broader chip index 3% rise. These growth companies that have been selling off these highs, the reality is their valuations were high, but they're good companies and they're leading the AI revolution, said Brian Klimke, Chief Market Strategist at Sterra Investment Management. Sometimes a little sell-off is good and they can provide buying opportunity. All three major indices were on track for weaker losses. The benchmark S&P 500 is set for its fourth consecutive week of declines, marking its longest losing streak in 7 months. The investment climate remains clouded in uncertainty due to Trump's inconsistent tariff strategy. Recent levies on metal imports elicited swift retaliatory actions from Canada and European Union. The U.S. president also alluded to the prospect of further reciprocal tariffs in early April. Several brokers also downgraded their ratings on U.S. stocks, and numerous companies issued cautious forecasts citing economic worries. S&P 500 plunged into correction territory and saw more than $4 trillion market value evaporate. The tech-heavy Nasdaq had already reached the correction threshold the prior week. Blue chip Dow, about 8% shy of its recent record peak, is one of the brink of its worst week in 2 years, should current losses persist. At noon, Dow Jones, we went through it already. Consumer staples, often seen as faring better in times of uncertainty, was on track for its biggest one-week drop since May 2022 after it became in the crossfire of Trump's tariff threats. Stocks dipped briefly earlier in the day after the University of Michigan survey revealed a sharp decline in consumer sentiment for March, with inflation fears mounting. Investors flocked to safe haven assets, propelling gold past the key 3,000 barrier for the first time in its history. U.S. listed shares of billion miners surged, with Barrick Gold advancing 2%, Sibanye-Stillwater rising 2%. Tesla added 3.4%. A report said the automaker would make a lower-cost version of its best-selling Model Y in Shanghai, aiming to regain ground lost during a price war in the second-largest market. U.S. Senate was on the verge of passing a stopgap spending bill to avert a partial government shutdown. Let me look at something real quick on the government shutdown probabilities. So the shutdown probability right now is about 35%, down from about 50-50 yesterday. Very volatile. Central banks' policy decisions will be closely watched next week. Traders expect U.S. Federal Reserve to maintain interest rate at its upcoming meeting, according to LSEG data. Advancing issues outnumber decliners by 5-to-1 ratio in NYSE and 3-to-1 ratio on Nasdaq. So a very widespread bounce today. This is the kind of reversal that we have been, saying that I've been saying that it could be possible. It could possibly come up, and we'll see if it lasts next week. I think the economy is headed into a recession, so I don't expect this bounce to last. But we'll see how today closes and how it continues on Monday, Tuesday. Next week's meeting, I think, is going to be around what the Fed dot plot shows. The markets are expecting this year a 3 to 4 rate cuts, but I suspect that they're not going to change their expectations of 2 rate cuts this year. I think the markets will be disappointed with how many rate cuts the Fed shows next week. Currently, the first rate cut is expected in the June meeting by markets. Earlier, there was a possibility of a May rate cut being priced in because of the last 2 weeks market performance, but that got pushed back to June. And then by December, markets are expecting 3 rate cuts. All right. We're going to keep it short today, unless somebody has, it's a Friday. We went on for 5 hours in yesterday's space. I recommend listening to that one if you want to get your TSLA live dosage for the week. But this week, I'm going to just focus on, today, I just want to focus on the University of Michigan sentiment survey. So let's pull that up. Let's see if we can get some details beyond what the headlines show today. Consumer sentiment slid another 11% this month. So this is the first reading for March. We don't have that many data points for March. And so that's why I'm kind of paying attention to this. It's not that important. This is a preliminary reading. It's not the end all be all of economic data, obviously. But I think it's important to pay attention to more shorter term data these days. Consumer sentiment slid another 11% this week, with declines seen consistently across all groups by age, education, income, wealth, political affiliation, and geographic regions. Sentiment has now fallen for 3 consecutive months and is currently down 22% from December 2024. While current economic conditions were little changed, expectations for the future deteriorated across multiple facets of the economy, including personal finances, labor markets, inflation, business conditions, and stock markets. Many consumers cited the high level of uncertainty around policy and other economic factors. Frequent gyrations in economic policies make it very difficult for consumers to plan for the future, regardless of one's policy preferences. This is also true, by the way, for businesses, obviously. Consumers from all 3 political affiliations are in agreement that the outlook has weakened since February. Despite their greater confidence following the election, Republicans posted a sizable 10% decline in their expectations index in March. For independents and Democrats, the expectations index declined an even steeper 12 and 24% respectively. Year-end inflation expectations jumped up from 4.3% last month to 4.9% this month, the highest reading since November 2022, and marking 3 consecutive months of unusually large increases of 0.5 percentage points or more. This month's rise was seen across all 3 political affiliations. long run inflation expectations surged from 3.5% in February to 3.9% in March. This is the largest month over month increase since 1993, stemming from a sizable rise among independents, followed an already large increase in February. So the most important thing on this one, obviously, is how widespread the deterioration in expectations is. Earlier, January and February readings for University of Michigan, people criticized it and saying this is politically motivated. It depends on whether you're a Democrat or Republican, how badly you were viewing, people were viewing the economy. But in this one, not only Democrats, but also Republicans and independents, as well as all groups by age, education, income, wealth, political affiliation, and geographic regions. So the deterioration across the board. So the real economy, I think, is showing some deep weakness in early March. We'll see what that means for next week's Fed meeting. I suspect the Federal Reserve Chair Jerome Powell will focus on inflation expectations rising in the near term, incorporating some tariff expectations volatility. And I think secondarily, he will mention weakening employment market. And on the other hand, longer run inflation expectations in the surveys are surging, but in market-based data, they remain well anchored. So I think it's going to be more of the same. And the surprise, I think, is going to be rate cut expectations in the dot plot is just going to be about 2 as opposed to 3 expected for the markets. So that's my prediction for next week. Any questions, comments, please request to speak. Let's look at some market data and then we're going to call it a day unless somebody has a question. Dow is up 1.5%, NASDAQ is up 2.4%, S&P 500 is up 1.9%. Advancing issues outpace 5-1 declining issues. But interestingly, 2 out of 3 new lows are 216 stocks are making new lows, and only 99 stocks are making new highs today. Technically speaking, from a technical analysis perspective, a lot of the key stocks are below their 200-day moving averages. So in my opinion, this is a temporary bounce in the markets, and then next week, we're going to see continuation of the downward trend. Let's see if Meta has anything to say. Otherwise, we're going to call it a day. I sent an invite to speak to Meta, and then we can see if he has anything to say. Otherwise, we're going to call it a day. As a will triple, go ahead.
Hi, Aman. I was wondering if you had a time to watch any of the FSD videos from China, and what are your thoughts on it so far?
I don't think Tesla has even a chance of making any money on FSD in China. I think the competition is already ahead of FSD, and they're giving away for free.
Okay. So sure, they don't have any chance making money, but as far as technology, do you think do you still believe that what China has now is better than FSD?
Do I still think what?
Do you still believe that the Chinese version of FSD is better than what Tesla has?
I mean, I don't think it matters which one is better. Any difference in the future on autonomous driving systems will be minimal, not noticeable by the average person. and therefore no company will be able to charge any economic profit, and that's really what matters.
Well, so today, if you have a driver, right, you have to pay them. So you don't think that none of these companies will be able to charge anything for the driverless drives?
Yeah, profit wise, there's not going to be a profit. They might charge a few cents or whatever, I don't know, but nobody's going to make a profit on it in the near term. Meta, what do you think?
Honestly, I just popped in to the space, and when I popped in, you mentioned you were about to close it, so I had waved goodbye, but figured, okay. I don't know. I didn't catch your space early enough. I apologize.
That's okay. We just started, and I just went through the consumer survey from University of Michigan that shows widespread surge in inflation expectations and plunging employment expectations. So
That's
stagflationary across the board. This is the third month in a row we're seeing sentiment deteriorate. What do you think about that?
that's if I'm understanding correctly, that's surveying students and people, right? Not uh looking at data.
Yeah, this is a survey of opinions. Correct.
Yeah, and the data is showing the opposite, which to me is usually what happens, right? People have lagging indicators. So I think the sentiment you're hearing now from people, even though they're expressing it as forward looking, is based on like lagging data. So it's not a good predictor.
What is the data showing? What data are you looking at?
CPI, like egg prices, gas prices, things are down.
Yeah, I think inflation expectations for general. Um, the CPI is still running 3%, and that's before tariffs start getting incorporated, which is expected to add about a 0.5%. So, inflation is still high. Um, and inflation expectations incorporate on the survey side and also on the market data side as well.
I think
Uh,
tariffs will
they
take
incorporate tariffs being incorporated in the economy, whereas the CPI does not.
yeah, but tariffs take a while to make their way through the pipeline. It's not like yeah, there are some finished products that Americans buy that will be tariffed, but there are a lot of the tariffs we're talking about here are on um like wine and beer and stuff like that. People will just buy other products. I don't think that will be as inflationary. You can adjust the CPI bucket. I don't even know if the CPI bucket includes that, like, like when they pick the products, like how many of the products do they pick include foreign products? I don't know if it's that granular.
Um, sorry,
Like
what's the question? Does it include wine imported? Yes, it does.
no, I'm sure it does, but I'm saying like from a representative standpoint, the percentage of Americans that buy French wine but don't have collections of French wine or don't buy French wine from collectors who already have the French wine in America, that's very nuanced and complex, right? Most Americans probably go to a restaurant and they just get whatever wine the restaurant has, or they buy whatever wine they're already used to buying, but it's usually not an imported wine.
Yeah. Yeah, I think to the extent that there are substitute products, I agree with you, but that 0.5% addition to overall inflation due to tariffs incorporates those assumptions.
I'm sure it does, but I think humans have bias, right? So like this is too complex of a system, I think, for anyone to really forecast accurately. I don't hear a Chairman Powell like disciplined person saying it. So if you have a resource there, I'm happy to look at it. But there's a difference between market expectations and like somebody can like provably say this is what the impact will be and that they have a track record of getting it right. I don't think the market has developed the skill set to forecast this kind of stuff yet.
Yeah, the market data also shows a surge in break-even inflations as well. So it's not just survey. Both survey and market data shows surging inflation expectations due to tariffs.
Okay, let me ask you a question the other way. How often have inflation expectations aligned with actual inflation historically, and how often has inflation expectations not panned out?
I think if you got there's so many measures of inflation expectations. There are like dozens of them, but generally speaking, they have aligned well, is my understanding.
No, I don't think that's true. I remember back whenever this is back tested, it's not proven out. Like we heard the same shit when the yield curve first inverted. Do you remember like all the statements about yield curve inversion, yield curve inversion? It only happened 3 times in history, and people did like a hey, I found this one thing, and 3 times it happened in the past, and it led to things. And they ignored all the other macro factors like yield curves inverting during global wars. This is a lot of like bad
Yeah,
science. Like
yeah,
you got to back test stuff. You got to come up with a thing, and then you got to back test it on a different data set. You can't look at the data set that you're using to draw a conclusion and then be like, okay, I'm done. That's literally in AI what we call overfitting. People are overfitting their market theories.
yeah, maybe. Um, so what do you? So you just ignore the data?
I'm not ignoring the data. I'm looking at where like the direction of trueflation is negative, right? It's going downwards. The direction of uh cost of goods in that people are sensitive to, in my opinion, like groceries and gas, that's where what drives sentiment, in my personal opinion, that is going down. So while I agree with you, refrigerators will get expensive, expensive wines will get expensive, cars that are imported might get expensive. A lot of the imported goods that will be impacted, in my opinion, are not the things that drive sentiment for the vast majority of Americans.
Yeah. So what do you think of when you look at the graph at the top that shows surging, plunging employment or surging unemployment, whichever you want to look at it, and both near term and long run rising inflation expectations? Do you kind of just like say, this is just backward looking?
So I ignore the expectations, the unemployment data we could talk about because that's actual data, right? Expectations, whenever we talk about expectations, we then have to ground it with how is that data
No,
collected?
they're all expectations. So this is the left hand graph that you see. Unemployment 1 year is percentage of consumers expecting more unemployment.
I agree, but that's slightly different because it's more grounded in we know what companies have been doing. It is humans can say I don't plan to look for a job, and that is data, is not expectation at that point. Like someone saying I'm expecting that the price of eggs will go up, who has no control over the price of eggs, is not meaningful. Someone saying I'm expecting I won't be looking for a job in 6 months is meaningful because they control that. Y- is the difference clear?
No, can you please explain again? Sorry.
um, I think the humans being surveyed on unemployment have some degree of autonomy over how many people will actually look for employment. Therefore, because they have some agency over it, the survey has some level of signal. I'm not saying it's 100% signal, but it has some level of signal. Whereas when you survey people about their expectations about market pricing of goods, most of the people being surveyed, I would say almost all, have no power over the pricing of those goods. So now what we're surveying is their understanding of someone else's decisions. So I don't think that's as useful.
Okay.
So I'm basically trying to say like markets are good predictor in valuing things they have agency over, not things they don't have agency over.
Yeah, I mean, I disagree. I mean, we don't really know what agency the respondents have over employment decisions or inflation data.
I mean,
I
if
would
you
say I
put
would say they're similarly low
I,
agency.
I don't know. I think people know if they're getting laid off, if they're looking for another job. People have a sense of, government layoffs are happening. We know that is happening. So anyway, either way, I agree that there will be higher unemployment, but from market economic theory and the Fed's policies, if unemployment gets too high, we will likely see the dual mandates start to be in conflict. If even if inflation stays high, they'll have to try and find ways to incentivize hiring.
What do you think the Fed chair is going to say on Wednesday?
almost everything neutral, not take a position, probably say something to the effect of, because of things that are hard to predict, we're gonna take data-driven decisions. Like, basically, like, sometimes they would forecast a little bit longer out. I think they're gonna shorten the time horizon that they speak about.
And do you think he's going to talk about inflation expectations? And if so, what do you think is going to be the tone?
I think he'll be asked about it. I don't think he'll bring it up.
So you don't think he'll make a comment on inflation expectations in his prepared remarks?
He may make a statement about his expectations or the board's expectations, but I don't think he's gonna say consumers or the data about people's expectations. I don't think he's gonna comment on that. Not sentiment for sure.
Okay, let's see. Let me just jot this down.
And
Meta.
I don't have super high confidence on this for what it's worth. I just don't think
That's okay. I know macro is not neither of ours area of expertise here. So Fed chair
it's
wants
more your area of expertise than mine, to be fair.
won't comment on inflation expectations or sentiment, consumer sentiment in prepared remarks. All right. And I'll say that in my opinion, so this is just a bet for myself that I put in my journal.
We can call it not a bet, but journaling. We're just journaling
Yeah,
for
we just
discussion.
journal. Yeah. We just journal. Powell will highlight rising inflation expectations.
Out of curiosity, has he talked about consumer sentiment expectations in the past?
Yes,
Well, then you might
but
be more right.
but in the past, so here's the change I think is going to happen. In the past, he has talked about how inflation expectations are well anchored, and I think that's what's changing now. So I think the tone will be different. I mean, there's no question he's going to talk about sentiment and inflation expectations in my mind. But the tone, he can say something like inflation expectations are well anchored, or he can say something like inflation expectations are rising. And the second one is very problematic because everybody is on your side right now. No one is expecting the next move to be a hike. The markets on average are expecting 3 rate cuts this year. I don't think the next move is going to be a hike, but I don't think the market will get its 3 rate cuts this year. Stephen.
Hey, good morning, Iman. I just wanted to point out the ridiculousness of how he's critiquing the chart that you posted, sir, which is, has a lot of labels, x-axis, y-axis, a legend, and then you look at Tesla charts, which are not, labeled at all. And I don't understand why they're not giving more credit to the study that you posted.
I find it funny that Mr. Fart wants to talk about etiquette and wants to label me as a bull and make a bunch of assumptions. I think you should change your diet so you can change your last name.
Less lentils,
Yes.
Stephen. Thank you. Meta, what do you think about the kind of Tesla sales overall, how Model Y is being recepted in China? My understanding is that even the regular version of the new Model Y, so non-launch version of the new Model Y, has only a couple week wait times, which to me indicates a low demand. And in the US, Tesla is now ended taking orders for the old Model Y. And I'm guessing in the first week of April, or maybe by the end of March. I guess in some first week of it, first few days of April, Tesla will start producing or taking orders for the non-launch version of the Model Y? Kind of general comments around demand for the new Model Y.
I don't know if that's a demand thing, right? Like you have to switch your production line over at some point. So you produce a bunch of the old Model Ys, you have them in inventory. And right now, if you look at a number of states, I'm not going to get it right. I saw on the timeline a bunch of people posting how much inventory is left in different states. Other than performance Model Ys, the old Model Ys are pretty much gone. Like you have to buy, obviously, there's used ones out there. I'm just talking about inventory Model Ys that are not performance. You're going to have a hard time finding them in the United States. So if they were having a hard time selling them in China, it's possible, but it's also possible that a similar trend is playing out there where people want the new one. It looks great. Like I have the new Model 3. I have a lot of different cars because I have a fleet of them, but it looks really good and it it feels very different aesthetically, even though from the outside pictures it looks pretty similar. The front looks different. When you get inside it, the lighting is different. I think it's different enough that for the last 4 years, somebody who was maybe debating getting an upgrade or buying and maybe was just going to buy because of FSD transfer, things like that, or anybody who's looking to buy, the Osborne effect is going to kick in and they're just going to say, let me get the new one. Especially, and I think this is one of the biggest mistakes Tesla ever did was drastically cutting down prices. Remember, we talked about it forever. Like they didn't have leasing so that they could do it. And we thought it was a good idea. I think that was actually one of the dumbest ideas. And they should have just done rate cuts on the loans and they should have never done that. Like if they wanted to effectively raise prices when there was a lot of demand, they could have just increased financing prices and said, pay cash or we're going to take a premium on the interest rates. That's Monday morning quarterbacking on my part. I didn't think about it at the time. I thought they could have raised prices because there was enough demand. But I think there's been a lasting scarring memory in people's minds that Teslas depreciate pretty quickly now. And so they're not going to buy the old model that's about to depreciate because the new models come out. It's just the demand evaporated.
Yeah. All
But
right.
it's a temporary hit, right? The new model comes out and then the demand is just delayed. Once the new model's available, the demand will resume.
Yeah. So okay. So you expect the new Model Y demand to be as good as expected by Tesla bulls.
I don't know if I would say that because some people have crazy expectations. I would say I think it'll be on par with the demand that the Model Y had before. I don't think it's going to increase demand. I think it at best keeps it where it was. But you have to do upgrades to maintain demand sometimes.
Do you think 2025 sales will be higher or lower than 2025? Four.
I think overall it really plays into my macro thesis. If we do see the 3 rate cuts this year, then yes, I think it'll be higher.
If we see 2 rate cuts, do you think it's going to be higher or lower?
2 rate cuts probably puts us close to parity, like within 100,000 cars up or down.
Okay, Steven?
So my question is, California was the number one user of Tesla vehicles. I'm fairly confident in saying that number, they're not going to be that in the future. Where is that going to be covered? Is that going to be covered by more infomercials done by Trump to buy a Tesla? I don't know how you continue to have the demand levels that you're talking about while losing California.
The assumption that they're losing California, what is that based on?
Registration data that comes out.
But you don't have registration data for the new vehicle, right? Like how do you separate the Osborne effect?
You're correct. I don't have that.
Yeah, I mean, that's the kind of distinction right now, whether the, you know, plunging year-over-year sales across the world is due to the refresh of the Model Y, or if it's due to other factors. And I'm betting there's other factors, but Meta has already started, repurchasing his shares. Meta, have you built a large kind of like the number of shares wise? Have you built the same position that you had that you sold earlier?
So I sold about 25% of my position, and I have a plan to make the purchase back through dollar cost averaging as long as it remains below 280. I'm about 20% of my way through that.
Sorry, you said you sold 25% of your position earlier? I thought it was
Mhm.
the entire thing.
No, I didn't sell the entire thing. I'd only sold
Okay.
25%. I
So
was
75% of your position, you wrote it down from 450s to
uh
early. Yeah,
yeah, exactly. Yeah. I held the remainder of the position. Yeah.
right. Yeah, I was under the impression that you sold everything. Okay,
I mean,
interesting.
it's hard because like it's relative, right? Like if you ask me from a while back, because I did sell 50% of my position a long time ago, and then I sold a little bit, and then but we're just talking about the recent thing. I sold 25%.
Oh, okay. When did you sell half of your position?
That was like 4 years ago.
Okay,
It was a long time ago, but I was buying like a house and making life changes.
right, right. Um,
Again, you have to remember like a lot of my sales, like this time around, the 438, timing wise, I look like I'm really smart, but it wasn't purely because of the pricing of the stock, right? The stock price was high and I wanted to have some capital ready to invest in something else.
yeah. Okay. Um, what do you want to talk about? Do you want to talk about AI a little bit?
Sure, yeah. I think if you want to chat about it, I don't know if you had a chance to look into
Yeah, let's look at that.
lemma, things like that.
hmm I'm
I
going to
put
pin this thread up here and just go ahead.
Yeah, I think you're going to pin the same thread. I was going to suggest you do it. So go ahead.
Yep. So this one says Google just killed 90% of image generation tools with one update, dropping 10 jaw-dropping examples below that will make you rethink everything you know about AI visuals. Gemini 2.0 Flash now creates images natively, no more app switching. It maintains character consistency across entire stories. It renders text properly, unlike every other AI generator. It understands the world, recipes, places, concepts. It can edit images conversationally through multiple iterations. The death of creative limitations is here. One model, unlimited potential. I didn't go through it. What are your kind of general take on this?
So I think if you just scroll down a little bit, you don't even need to read anything. Just look at the visuals. Like there's a dragon story that's created by somebody basically just prompting what story they want, asking it to draw the visuals, and it draws the visuals. The dragon stays consistent through the storyline in different pictures. So like the character remains the same. Similarly, they ask for recipes and it draws recipes. And as it builds the recipes, you can see the color of the dough changing based on like the ingredients that are mixed into it. Like so, like real world understanding is going up a lot as a result of this. It's not in this thread, but I've seen in other examples like um, people adding an individual and then creating a story around it. So you can think of like storyboarding, people writing books, people writing maybe movies or doing various things. Like obviously, one has to be mindful of how things go and how people use things. But I would say if people thought they could look for the sixth finger, like that's not going to be a good test anymore, right? Like this thing is not putting six fingers on people. Text is showing up. Like a lot of the indicators that would tell you something was not good, not real AI, are not present, but they do have a marker on there, so they can tell you if it's fake, but maybe you visually can't tell if it's fake.
Do you see similar increases in FST performance, or do you think this is going to be limited to LLMs and image generation for now?
So the core innovation here is multimodality, right? So OpenAI talked about this a year and a half ago when Greg Brockman was on stage and he was talking about like take a picture, build a UI, that whole thing. So that concept was great, but they didn't ship multimodality. XAI, I think, is supposed to be multimodal, but they haven't shipped a multimodal thing. If Tesla or Elon's companies in general demonstrate that they can build multimodal models, I think it really does accelerate the training for FSD. Because imagine the ability to consistently generate. There's another thing I've seen on another one for this exact same thing. Somebody basically asked for a character to be generated. Then they asked for the character to be put into a video game. And then they said, I want to walk the character forward. And the character walked forward. And the rest of the video game started to get generated. You can kind of see how that goes into like, oh, do that enough times and you can make a movie, you can make video, right? Like, so this is the beginnings of that. And of course you can see VO2 is out there, so they obviously can do that with short videos as well. It's just the same thing. and it only renders like the portions of the picture that need to be changed. So it's efficient. It's actually very fast. It's like 5 to 10 seconds. So it's faster, higher quality, smaller model, efficient, consistent. These are the things you need to then say, okay, now we can have a high fidelity simulator. If you have a high fidelity simulator in the cloud, you can take the exceptional cases that you see in your large fleet of data and really run them through. I honestly think the only thing that's limiting Tesla right now from all the posts I'm seeing is a larger context window. That is probably the biggest 80 to 90% of the complaints I'm seeing. It's such a big factor that I don't even think it's worth waiting through what the rest of the issues are with Tesla FSD until they put the context window in there. And I think they're working on it. It just is going to be a retrain. And I wouldn't be surprised if they call it V14, frankly.
Yeah, why do you think they've taken? I mean, this was supposed to come last year.
I think they
The
underestimated it.
three-time increase in context window was supposed to come last year. You think it's gonna be V14 now?
I don't think it was supposed to come last year. To be fair, I think they said it was on the roadmap for V13. I think they were just announcing the things that they plan to do, probably in an attempt to attract talent, in my opinion. That's kind of like why you would do that kind of thing.
Yeah.
Certainly was attractive to me. Like, I obviously didn't go there, but I think it's great that they're putting that kind of stuff out there. I could see when they publish their next thing, maybe they talk about memory models, right? Tesla FSD has the ability to use something like Titans, where cloud-based services don't. Not easily. They can, but it's not easy. The reason is because those memory models are. It takes a long time to load models onto chips and off of chips, and the memory models require basically staying on the chip, right, for the same user. So like with a cloud service, the idea is that you're all sharing the same machines. It doesn't work really well if that machine takes 30 minutes to switch, right? Nobody's waiting 30 minutes before they get a response to things, unless it's like deep research or something. So for the car, Titans actually is a really good improvement that could come as well. So I think context window, and if context window doesn't solve everything, then the memory models. And then I would need to see examples at that point of what it can't do. Like, I don't see what it can't do at that point. And then the thing about the memory models is they have a potential to allow the compression down to hardware 3, in my opinion.
Okay.
Because
Yeah.
key thing here is with the memory models, smaller models are demonstrated to have the ability to support large context. Here's the theory. I don't know if this is what happened, but let's say they were in the process of implementing the context window, and they were implementing the context window without a memory model. And then these papers start to come out, and they see these papers, and even if they're in the middle of their implementation, they might just say, this is silly. Let's not implement it this way. Let's go properly retrain everything once in a memory model format. Maybe that's what they're doing. I don't know for sure.
Okay. I mean, I guess we'll wait to see FSD 14, which I think is going to come next year, or maybe later this year. First release next year, wide release. You listen to cadence.
Yeah, I think it would depend
And
when we don't see releases for a little while. When we don't see new models coming out for a while, that'll be a good indication that they're reallocating the resources to training a new foundation.
mhm. And what percent of trips do you expect it to achieve without a disengagement? What percent of trips do you expect FSD 14 to complete without a critical intervention?
We're talking about within the best performing ODD or nationally?
Nationwide.
I don't really have a great estimate for that. The, the thing is, arguably, if it starts performing really well in some areas, the number of trips there should increase, but you're probably going to want to look at the FSD beta tracker, and it's not going to get that data represented on it. So if you want me to forecast how the FSD beta tracker will see an increase, that probably not going to move as much nationally. I don't think like the national number is a good indicator. So it's hard for me to put my head in that space.
Yeah, yeah, and looks like right now, percentage drives with no disengagement by state province. Texas has 7,000 miles, a couple hundred entries, shows 99%, and California. Let's see.
He's like 98 or 90.
99% California, Texas 99%. They both California has only about 100 entries, a couple thousand miles. Texas has 7,000 miles, 377 entries, and both 99%.
I think if you sort by percentage, you can actually see the top states, and you could add up all
Well,
the maps.
the thing is, like, then you kind of get into the issue of, some of the states like Arkansas,
Yeah, maybe put a minimum number of trips before you add the states. You could like
yeah, well,
say
that's
best
the
performing
problem though.
with
Like,
enough
like
trips.
in my mind, it has to have thousands of entries for it to be anything
Yeah, but none of them
worthy
do.
of discussing. None of them do exactly.
Yeah,
So the
but
only
you could
thing I can do
combine
is look at
states.
national.
Couldn't you combine the 2 or 3 best performing states? Like, just I think Texas and California is a reasonable one to do because of the fact that that's what they're targeting.
Mhm.
Right, like
Yeah,
to say it's not performing in places where it snows is like, okay, great, yeah, that heard. Like, that's not their goal right now.
yeah. I mean, you can combine it. It's just that it's not going to be material to Tesla's financials until it's nationwide. Unfortunately,
It will be. I disagree. As soon as you can have autonomous Teslas driving around in Austin, you don't think that's material to the retained value of every Tesla?
I mean, unless if it's hardware 3, like most of the
But
fleet is hardware 3 or 4 right now, and I just don't think hardware 4 is going to get there.
so you think the probability of pricing on hardware 3 moves, like, sorry, the expected resale value of a hardware 3 moves 0% after hardware 4 is autonomously driving in major cities?
Yeah, I don't think hardware 4 is going to drive autonomously in major cities, but yeah, even in that case, hardware 3 will move 0.
Yeah, see, I disagree there because of the fact that most of the population has such a low expectation of that happening, and I would say the investor base, not Tesla bulls, but the investor base overall, that when that happens, the surprise will make them overcorrect the other way.
Okay, Stephen.
When you go to trade in a Tesla, does the version of the hardware that you have play a factor in it? Because I've heard different factors where
Yeah, it does.
sometimes USD will deflect.
It
Yeah, of
does.
course,
Yeah,
just like mileage, everything.
yeah. You can get a hardware 3 vehicle today for about less than $10,000.
Yeah, if it has over 100,000 miles on it, Yaman, that's insincere what you just said. Come on.
Yeah, I mean, these vehicles are supposed to last hundreds of thousands of miles. So,
I mean, they're
yeah,
still
hardware 3 vehicle.
lasting. No one said they're supposed to last at the same price. It's not like the seat doesn't get wear and tear. It's not like interior. Like, a lot of people don't want a vehicle that somebody's been in for 100,000 miles. That's a lot of
Mhm,
hours.
mhm. And then hardware 4 vehicles are trading kind of just now slipping below 25, which means they qualify for the 4,000. So they're about 20,000 miles in. So that's a big difference between hardware 4 and hardware 3 vehicles. But hardware
Yep.
4 is going to rapidly depreciate this year as new Model Y ramps. The used Model Ys, I would expect them to kind of decline below 10,000 too.
You think hardware 4 Model Ys will go below 10,000 this year?
Yeah.
Okay. There may be one or two like crazy high mileage and accident Carfax on them, but I don't think the average that I don't think that's going to happen.
Yeah, I don't think the average will happen either. Because I mean, the hardware 4 vehicles, remember, are 2023 or later. So, and that's like mid 2023. So only 2-year-old vehicle going from $70,000 to $10,000 on average would have been crazy.
Agreed,
But
and that's
even if
why
there's a
it was so
few,
crazy. I was almost willing to take a bet, but then
but
you can't. Somebody can have a
even
bunch of
if
accidents, and then the
even
Carfax on
if
that.
even if a few, let's say 1,000 of them trade around $10,000, that's crazy, still depreciation. And even if the average goes below 20,000, from 60,000 to 20,000 in a couple of years, you're talking insane levels of depreciation. So the
But
perception
it's
that
noise.
no, it's not. Perception that Teslas depreciate at a much faster pace than the average vehicle is not going to change this year, next year, or the year after.
I guarantee you, I can find all cars out there. If I looked at the cheapest extreme edge case of how much the extreme edge case vehicle depreciated, you can find similar 90% drops, because nobody wants a car with 3 accidents in its history. Nobody wants rental cars with not a lot of good care and accidents in their history. Those cars drop fast.
Yeah, these are not 3 accident cars. These are 1 owner. Maybe I don't think that these are not. I don't think they have any accidents. To be honest, the ones I've seen, they just have high mileage, more than 100,000 miles.
Yeah, and buyers
And
have
that's
choice.
it.
Buyers have choice.
Mhm.
Buyers have the
Yeah.
ability not
But
to buy them.
the problem is, so the argument you're making is that other vehicle makers have the same problem. And yeah, that's true. First of all, they didn't sell for $60,000-$70,000. But secondly, even if Tesla is just trading as if other vehicles, then you're saying Tesla Automobile should have 5 to 6 times PE ratio. So that's still a problem from a bull's perspective. So that's why I'm surprised that you're starting to add back to your
Wait,
Tesla
hold on. So
shares.
you're claiming that the resale value of the car dictates the PE of the company? Is that what you just said?
That's not what I said, but it's an indication how different Tesla is from other automakers.
No, I would argue the opposite. If you can charge more for your car than other automakers can charge, and they all depreciate down to the same price, then the Tesla stretch is insane. I'm not saying this is real. I'm saying
And
the math on what you're saying doesn't make sense.
That used to be the case, not anymore.
Tesla doesn't make money from the used car sale market. They make money off the new car sale market.
Okay. All right. Anything else? Let's see. Stephen?
Hey, I just dropped a link in the chat. You mind? Just because you guys were talking about titles and stuff, customer called in, and it was a interesting conversation. I put the link in the chat.
Okay. Yeah, I think this is pretty much what I want to discuss overall today. It's really more about the University of Michigan. I want to do 30 minutes. We're now at 53. So we're going to call the day. If anybody wants to kind of listen to more Tesla, yesterday we went for 5 hours. So you can listen to that part. Actually, hold on 1 second. We have one more speaker coming up. Bull 2035.
Hey, Meta, have you looked into Rivian's autonomy? They released a video the other day with RJ. How's Rivian
No one
looking?
cares. No one cares about Rivian's autonomy. All right. Thank you very much, everybody. And I'll chat with you all next time. Take care.